Hey everybody, welcome back to the Unlock Your Retirement program. We were talking before the break there about market risk, and I was getting ready to throw a question to Bruce, but one thing that Chris reminded me of on the break, I can't keep it all, between the three of us, we'll figure it out. But you can call for that initial 20-minute complimentary discovery call at 888-5601. But another way you can do it is if you say, I'm driving, I can't remember the number, remember this, discoverunlock.com. Discoverunlock.com. That'll take you right into our schedule, and you can schedule it. Again, it's a 20-minute complimentary phone call. It's very simplistic. You can ask us whatever you need to ask us. We're going to talk to you about your situation and see if there's a possibility where you could use enhanced planning to unlock significant value that you might otherwise forfeit and not take advantage of during your retirement lifetime. But talking about market risk and why a second opinion might make sense is for the different things that are going on with moving pieces, whether the market continues its upward climb or we see a significant drop in the market. People, before the break, we said about people who they don't want to sacrifice growth. I don't want to make the mistake of being in cash when I shouldn't be, but I also don't want to be in the market when I don't want to be when the market's dropping. So what about alternatives? So a second opinion for reducing exposure to this market volatility, but not sacrificing growth. Bruce, could you speak to that and what some good strategies for enhanced planning in that area?
In building the overall picture, the more information that you have, the easier the decision is to make. And that's, it kind of goes back to the whole health analogy. Getting a little bit more of an understanding of what your portfolio may be. You may see that there are some disconnects that need to be fixed. You may see that there are some ideas that may not necessarily make sense, or at least getting a little bit more insight into those ideas. Being able to build those additional strategies and defensive investments into your portfolio will help reduce that exposure to the market volatility, but you can still capitalize on the market growth.
And I think the biggest value that people are surprised at, whenever you look at these alternatives, is, we're talking about, again, we always say wealth management is really about the future. The reason why you hire professional elite wealth managers is, give me the best possible future given my circumstances. The unique part of protected wealth assets and wealth preservation assets is that unlike the traditional, stocks and bonds in a portfolio, you have no idea what the future performance is going to be, and it's a total 100% unknown. You don't know what's going to happen. What we look at is construction of portfolios, especially today, where people say, I've had a good run up in my portfolio. Is there a way for me to lock in those gains and not experience future losses, but still have a decent opportunity for growth if the market continues its upward climb, but protect me from the downside? Chris said earlier in the last segment, too many people have an expectation that their advisor is going to time it exactly right, and as soon as the first crack appears in the market, they're going to jettison them out of the market and put them into something safe. I always say it's better to have knowledge of what's going to happen in advance. So, the idea of protected assets, we know in the future, when that market crash happens, I protected those assets, but I still have a reasonable return on that money. And then you have wealth preservation assets that are going to minimize the impact of the down market. You're not going to take the full brunt of the down market, but they have great opportunities if the market continues its upward swing. So you want to be in the best possible position, but if you can know results in advance, if you can know that you're not relying on an advisor to get you out of the market because you're already protected in that area or have wealth preservation strategies ingrained. And if you do this in a majority of your portfolio, you're doing something that Warren Buffett recommends. He's always said that you should have more upside potential than downside potential in your portfolio. And in doing that, it can help your returns. His words, not mine. And from that, so if you take that portfolio and in advance that, say, 50 or 60% has built-in wealth preservation and protection, and only a minority is a total unknown, like the usual stocks and bonds of asset allocation, you'll find that you have a much stronger, more durable, more consistent, more predictable portfolio. And that's something that's one of the reasons why people get a second opinion if they only have just a stock and bond 60-40, 50-50, 70-30 portfolio. They want that enhanced planning, those additional benefits. They like to know in advance what's going to happen with a large portion of their portfolio. So, what about, stress testing a portfolio against economic scenarios? We talk about inflation, we talk about different things, tax. We're going to talk significantly about taxes in the next segment. But, is that when you build this portfolio and you say, okay, I'm going to be invested in the following. Certainly, yes, you're going to be diversified into different elements, but you have the traditional elements, stocks and bonds. You have the non-traditional elements, are the advanced planning, enhanced strategies for wealth protection and preservation. But if the economy, for example, if inflation is going to be higher than expected, how do you solve that? Well, you need more money. So it's either go be a Walmart greeter, or you want to have a more durable, more stable portfolio. And I think that's the surprise. Bruce, said it really wonderfully, that people, they're lulled into complacency. The market's been going up, it's been going up, it's been going up. We saw the Fed drop rates. Every time the Fed drops rates, we see a jump in the market. But you can't just continually drive rates down, as we saw, in past history, what that did to our finances. So, are you better off today than you were in the past when you look at your 401k, you look at your investment statements? The answer for the most part is probably yes. Will it retain itself? Will it remain in that position? No. Eventually, there will come a significant market adjustment. And how do you best prepare? And a second opinion, can really help with that stress testing in advance for considering these economic scenarios. We've got, a few minutes left in this segment. I don't know where it just flies by. Ladies and gentlemen, we love listeners. We love the calls you put into us, emails you send to us. But it just seems like every time we do this, it just goes too fast. But, when you talk about being well diversified, Chris, it seems like, the normal out there is either stocks and bonds individually or mutual funds that hold stocks and bonds. How do you respond to that when somebody says, if I'm having a second opinion done and you're talking about portfolio diversification, how do you expand that conversation?
Yeah, so what you traditionally see out there is, hey, I'm in my 60s, so I should have a 60-40 portfolio, maybe 60% bonds and 40% stocks, or vice versa, depending on your risk level. And what we see there is your bonds traditionally, when the market drops, your bonds are there to help buffer that loss that you see. It's not going to make up what you're losing in the stock market often, but hey, it helped soften the blow of how much the stock market lost. But still, at the end of the day, and we've talked before about seeing a year like 2022 when both sides were down. You're still, both sides of your portfolio are still at risk, and they can both still drop in a year. So are you really diversified, when you don't have anything, that can protect you in those years? You don't want to see, your whole portfolio drop 15%, so by talking to, someone else, getting a second opinion from someone else who could bring some outside assets like both Bruces have talked about here today, with the wealth preservation or the wealth protection strategies, so in advance, you have some of those areas that are protected. That your current advisor who's giving you that 60-40 portfolio, he might not have any other tools in his bag, to help you. So that second opinion could help you find, other assets that are uncorrelated from the stock and the bond market world.
So the he or she other advisor, or maybe the virtual electronic advisor. Maybe you're using ChatGPT. There's lots of ways to get advice these days. But of course, we've been in this raging bull market, and so, Bruce, if you're in an entrenched longer term bear market, what are the advantages that a second opinion now could help somebody before they enter that bear market that would change the face of their portfolio and what they see in their retirement account?
A lot of people, whenever they're facing a bear market, one of the conversations that we constantly hear from people is, I think I need to go to cash. I think I need to pull my investments out and let the market sort itself out. In a lot of instances, wouldn't it make a little bit more sense if you sit down with someone and they have a little bit of insight that you may not have heard from another advisor, of, let's put something in place where you are protected in the event of a market downturn. But at the same time, you can still make money as the market's making money. If through the bear market, if you're able to put something in place ahead of time, regardless of whether it's a bull or a bear, that you can capitalize on both sides of it, wouldn't that make a little bit more sense? A lot of advisors will sit down and try to go through the mix that Chris here had explained, the 60-40 or what have you, of stocks and bonds. That may not always be the answer. You may be looking for something a little bit further down the road that's going to give you both sides to it. So, that's where the wealth preservation and everything kind of comes in place.
Sure. All right, and believe it or not, we're done with our next segment. It just flies by. So, again, you can give us a call at 888-888-5601 to schedule your complimentary 20-minute discovery call, or visit discoverunlock.com. We'll be right back with the Unlock Your Retirement radio program.
And now the moment our lawyer lives for.
Fee-based financial planning and advisory services are provided by WealthKare.com, Inc., an investment advisor based in Pennsylvania. Use of the term tax-free refers to federal income tax treatment only and may not apply to state, local, or specialized taxes. The impact of taxes varies by individual or family and should be considered before any transaction. Case studies are based on hypothetical scenarios, not actual clients, and do not guarantee specific results. All recommendations are tailored to the client's unique data. WealthKare and Bruce Smith are not affiliated with or endorsed by the Social Security Administration or any government agency. All content is for informational purposes only and should not be used for financial decisions. Unauthorized use is prohibited.